does it work? Yesterday. Hello.
Hey, Miss Danielle.
Hey. All right, we're going to dive right in today to the differences. You said that just clients of yours that are looking into maybe doing an FHA loan, and why should they? What's the benefit of doing FHA versus conventional or
Right.
a different kind of loan? What makes something more appealing? And it's an awesome, awesome question, and one that recently has changed and made it much more affordable in many cases than doing a conventional loan, especially for a first-time home buyer. But just to start out, I'll tell you that you don't have to be a first-time home buyer to do an FHA loan. So that's something that's a rumor that is not true. It is something that is required that you have 3.5% towards the down payment. So it has a lesser down payment than other loans do. Although conventional loans, anyway, you can go from 3 to 5%, but okay, I don't want to get into all of that. So we'll cut
Okay,
that part because it's easy for me to like suck over there, but I don't want to compare the two. So I'll stick with that. Okay, so where was I? Said 3.5% down. So yes, so 3.5% down. The only thing that you are required to pay on an FHA loan to close is that 3.5%, unless you have a grant or you're getting a second mortgage for that 3.5%. For instance, my company has something called FHA Boost, which you can actually take a smaller loan out for that 3.5%. In that case, you could do this with no money out of pocket, essentially 0%, because we can also have a seller pay 6% towards your closing costs. So 6% towards your closing costs, this is a huge benefit. This can be closing costs. This can be for repairs that you might need done on the house because of inspection. This could also be for buying down your interest rate. So right now, it's exciting times. Interest rates are starting to drop. We've seen the biggest drop we've seen actually on record all in one day. Just yesterday, we're recording this on the 14th. Which was so incredible. We're so excited about that. And so you can do this permanent buy down, which can get you, let's say today's mortgage rate for FHA is around 6%, 6.25%, which is great. It's been upwards of 8%. So we're getting into much better territory. So now you could buy it down or have the seller buy it down using points. Points, one point is equivalent to 1% of your loan amount. So take that 93.5 or 96.5% of your purchase, and that's your loan amount, and you can multiply it times 1. So that's pretty easy to figure out. Yeah, so $400,000 loan would mean $4,000. So the seller would pay that. That's only 1%, and they can pay up to 6. So this could really buy down your rate. It also allows for the 2-1 temporary buy down, 1-1 temporary buy down, or 3-2-1 temporary buy down, which are all programs that many people are getting into right now that reduces your interest rate 1% the first year, or 2% the first year on a 2-1, 1% the second year, and then the third year you go back to your regular note rate. What's awesome about that is if the seller pays that, which costs about 2% on most loans, 2% of your loan amount, then you are going to have the ability to have that huge reduction in monthly payment and interest the first year. The seller is essentially paying the difference between your actual rate and that rate. The other nice thing is FHA just recently, like within this last year, has reduced monthly mortgage insurance to 0.55%. So you pay a monthly mortgage insurance, PMI. This oftentimes is less than if you did a conventional loan. And we're going to do a whole separate video on conventional loans, but that's another reason to choose it. It's like, hey, we can put or we can have more paid for by the seller, and we have this lower mortgage insurance, PMI. And then the other piece of it is you do have a funding fee with FHA that you don't have with other loans. That is 1.75% of your loan. Now, that is rolled into your loan. So you don't have to come out of pocket for that. So it's not 3.5% down plus 1.75. So it's just added to your loan amount, which is also really, really nice. I'll tell you, once you're in an FHA loan, that when you refinance, if you're not taking cash out, you can do something called a streamlined refinance that is costing you almost $0 to do. You don't need an appraisal. It's just super simple, really quick. And that's a huge benefit of having an FHA loan. And really the reason to do that is to drop your mortgage insurance, in addition to wanting to have a lower interest rate, lower monthly payment, and so forth. So that was designed to go up to 97% of the value of your home at the time that you were to refinance. So yeah, that's pretty cool. What do you think? Do you have any questions? I went through so much.
That is a whole lot. No, I don't think I have any questions. It's just a whole lot.
Well, tell me, I know you mentioned you have your client that or you have some clients that might be interested in getting a condo. So what's unique about a condo with FHA? Do you want to share that?
Well, the price point mostly. This would be one of them is downsizing.
Okay.
So they're selling their home and they want to have access to their cash from their house that they sold.
Yep.
And they're happy with a 2-bedroom, 1-bath condo.
Yeah.
That they don't want to have a yard. So they're like, okay, find me a place that will make me happy. The other one is the other end of that, first-time home buyer who says, this is all I can afford. So one can afford more, but doesn't want to. And one is stretching to afford.
Yeah. Yeah. And you were mentioning to me right before we got on that there's something different in condos, right? With FHA, that they have to be approved, right, by FHA to be able to do a loan. So we can go on the FHA website and put in the condo address, the name of the HOA, and find out if it is approved. And I can tell you that if the condo has been approved at some point, that we can oftentimes have a spot approval, it's called, which will it kind of reinforces or reestablishes the FHA qualification on that condo. It's a very quick process to do if you're working with the right team and lender. So I'll tell you, with FHA appraisals, just one other thing I'll mention is a lot of realtors get nervous, I think, about FHA loans. One is you can also go to a higher debt to income ratio. It can be for a first-time home buyer that might not qualify another way, because you don't need to have as many trade lines on your credit bureau. You can have a lower credit score and still qualify for a FHA loan. I mean, I think they go down to 580, in some cases even lower, although we really want to shoot for 620 if possible, because rates are way better that way. And so it's important that if you are getting an FHA loan, that you have a lender that can share with the listing agent and your agent why they got the FHA loan. So I am obviously not going to say my client has a lower credit score, but I might say, hey, they're a first-time home buyer and this was the best loan for them. You know, I'll always say the strengths of why, but it kind of makes them feel a little bit more reassured that this thing isn't hanging on by a string.
Right.
And then I would say the other part is just the appraisal, is that there are a few more restrictions on appraisals, but I would say that in general, I have only seen this come back if it's glaringly something wrong, like there's peeling paint everywhere in the house, there's holes in the walls, toilets missing,
super yucky.
Yeah, like flooring pulled up. So if things like that are happening, the government wants to make sure that if, God forbid, something happened to your home and it foreclosed the next day, after you closed, that they would be able to sell it as is. And so it's called an as is appraisal. And so if it's in poor condition, and really poor condition, right, then that could be a problem. Other than that, an FHA appraisal is really not scary. They're not the inspector. They're not going to go under the house. They don't check
Right.
major, you know, they don't go up on the roof. They don't check to make sure the chimney is working appropriately. Like they're not looking at the foundation unless there was a huge crack in the foundation that went through the house and the house was cracked almost in half. That's something they would notice, but they're not a home inspector. So they're just really looking at that overall ins and outs. They're not going to check to make sure the toilet flushes and the water works and stuff like that. That's what your home inspection is for. So keep that in mind as a buyer, home buyer, seller, and as a real estate agent too, because I think they get a really bad rap sometimes for not meeting.
All right. I'm liking this. I think that the units I saw today, one of them especially will be a really good home buy purchase for somebody who needs an FHA loan.
Yeah. Yeah. And I'll tell you, I've had a lot of people that have chosen FHA.
Sure, why not?
Conventional. And I'll tell you that conventional before was just like, we always did conventional when we could, but it's so much less expensive and you can save so much money on having the seller, you know, build in costs or whatnot to be able to have the seller pay up to 6%. Whereas on a conventional loan, they can only pay 3% unless you put a much larger down payment down. So it makes a really big difference.